Hi, I'm Tina. Welcome to CMC Markets Weekly Outlook. We'll be taking you through the key events and issues that you need to be aware for this week. The U.S. stock markets faced a pullback risk due to bond jitter as the recent resilient U.S. economic data sparks fears for the Fed to extend its rate hike journey. The U.S. two-year bond yield hit a 16-year high. On the economic front, the U.S. labor market stayed tight. Friday job data showed that the U.S. unemployment rate stayed at 3.6%, which could put upside pressure on inflation, which makes next week's U.S. CPI data for June a crucial gauge for the Fed to decide on future rate hike path. In May, the U.S. headline CPI printed at 4%, lowest in 2 years. However, the core CPI stayed elevated, up 5.3% annually. Consensus called for 3.1% for the U.S. headline CPI in June. However, another elevated data could crash the market further. Nasdaq may continue retreating from its 19-month high level, as the chart is illustrated a potential bearish divergence from a technical perspective. At the same time, the tech rivalry was on fire in the US markets. Meta platforms launched a new Twitter-like social app called Stress. The social app gained about 30 million users on the first day of launching, and it aims to compete with Twitter for its users and advertisers. Meta's shares soared about 240% from its low in November 2022. But the chart is also showing a potential bearish divergence in its pricing and RSI, suggesting Meta may have been overbought. The U.S. earnings season will kick off with big banks including JP Morgan Chase, Citigroup, and Wells Fargo. Banking stocks rebounded after passing stress tests. However, with deposits and home loans declining, the big bank's second quarter performance will be on check. Elsewhere, China's influential economic data will be also eyed, including its new yuan loan, CPI, and PPI. In addition, the Bank of Canada and Reserve Bank of New Zealand will also decide on their policy rates. And the focus will be on the Bank of New Zealand, as the bank is expected to pause its rate hike campaign after 12 consecutive increases. However, the two central banks' guidance will be key influencing the future market trends. That's all on the horizon for this week. If you have any questions, please leave a comment and I will get back to you. Please subscribe to the channel for future videos, and I wish you a great week ahead.